Hello, everybody. Hope everybody's having a nice spring, summer evening. I guess it's Memorial Day. You got to consider it summertime. So the reason we're doing this is in 2 weeks we are going to be doing a session that seems to be very popular with everybody because it identifies where the high-powered breakouts are about ready to occur, and more importantly, when those high-power breakouts are about to occur. So not only are you identifying a high-profit, high-probability trade, but you're not waiting around for it to happen. You know exactly at the right time. And one of those patterns we'll kind of delve into tonight is kind of wedge breakouts. And so where do the breakouts usually occur? That's what we're watching for. We're watching for that change of investor sentiment. Now, obviously, we've got things that can tell us when there's a change of investor sentiment, like a candlestick reversal signal, an evening star signal, or a morning star signal, or a bullish engulfing signal. And if they're coordinating or collating, that's not coordinating, corresponding with where the stochastics are, becomes a much higher probability. So what we're basically looking for is when we get into a trade, we're looking for the exact timing of when that trade is about ready to break out and make a big price move. So concentrating on wedge formations allow us to prepare for that. Forming a wedge, you can usually see a support and resistance level, and you're usually watching the trading range start to compress. So your support and resistance level is pretty identifiable. When you can start seeing there's a resistance level and a support level, and it's all coming together to a point, now you've got much better prospects of seeing when the breakout occurs based upon analyzing what's happening as far as your signals and the nature of the candlestick formations at potential breakout levels. So if I see something like this where the resistance is obvious, the support is obvious, this tells me there's a new dynamic in that price trend. And it's basically because if I can see the support and they bounced off the support and they're heading up in this direction, I can be buying on the basis that the closer I get to this wedge point, the higher the probability it's either going to break this way or eventually break this way. So that compression of the trading range is visible, and you've got different terminology for, you can't see the slides. All right, make sure, yes, Chicken Hawk, make sure you're on screen sharing and not slides. So your declining wedge is something, obviously, that everything is moving in a lower direction, and when it breaks this level, tells you there's a brand new, what time frame? This can be any time frame. Remember, candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. This could be a 1-minute chart, a 30-minute chart, a daily chart, a weekly chart. It doesn't matter. They're going to look exactly the same. Now, what time frame do you want to use? That all depends on the time frame you're trading. If you're a day trader, you might be using a combination of a 1-minute, 5-minute, 10-minute chart combination. If you're a longer-term investor, you might be using a daily, weekly combination. So the nice thing about the graphics of candlesticks is it's got one criteria. It's the buying and selling of investor sentiment for any particular time frame. So again, a downtrending wedge, an uptrending wedge obviously looks like this. Now that doesn't necessarily look at that thing. That's enough of it. If you want to kick your grandmother. It doesn't matter what the wedge is doing, either breaking out this direction or breaking out this direction. What benefit do we have? We can see the little Doji star right here. or the shooting star, and then a gap down. And look at everything that this did, telling us it broke out of this wedge. Little Doji shooting star, lower open, and closed below the T-line as well as below the support level of that wedge. So that's what I'm looking for, is are they coming up through here or are they coming back through here? Why am I more attentive at this point? On which one? This one? Well, if I was watching it, I might see that if it's starting to trade below the bottom of this wedge, knowing that you had a shooting star, I'd start shorting it at that point. So remember, all the patterns have expectations. The entry will be at the breakout of a wedge to be safe. Yes. And then if you've got the additional confirmation that you had like a little doji, and remember our rule of the doji, it's going to move in the direction of how they open after a doji. So in this case, it's opening lower. It's trading down below the T-line, which is our first suspicion. And then it's trading down below the support level that we can see. That tells me it's going in that direction. So if we know that we have pattern expectations and we see something like this, let's say we shorted here, we covered here, we started buying, because what would we expect if we're buying right here, if you cut the chart off right about in here? A wave 1, a wave 2, going into a J-hook wave 3. Well, what happens up here? Well, there we got dojis and a sell signal below the last high. So we're starting to take profits based upon the signal. Well, what's that starting to tell us? Well, we had a high, a lower high. We had a low, a lower, or a higher low. We might be in a wedge formation for a while. What's that mean for my probabilities of having a good move one way or the other? Not very likely until they break out of this wedge. It means you just move on until you see something out of that wedge formation that tells you it's time to be going long or it's time to be going short. So anytime I can see a wedge setup, and I can add other things to that analysis, like there's my little slow curve. There's coming back up above the T-line. There's a breakout of the upper wedge, staying above the T-line, telling me, oops, I've got a breakout. Then it's very simple from there. You just stay long until I see a sell signal and a close below the T-line. So if I see a wedge setup, what's that tell me? There's indecision going on. I don't want to be probably trading this. This is telling me I'm setting up, but I wouldn't want to be trying to trade this until I see it actually break out one way or the other. Now, if I bought here, anticipating it breaking out to the upside, obviously when I can see a resistance level setting up and I see a sell signal that's telling me exactly what's happening at that resistance level. Starting to get people selling, get out of the trade. It's not breaking out. Right here, if I'm buying back here somewhere, knowing that it hit the bottom of the wedge, where am I looking? I'm watching to see what happens here. If it fails here, I close it back out. But notice what we had right here, a doji sandwich. And what does a doji sandwich infer? Well, first of all, if you have a doji right here, what's our simple doji rule? It's going to move in the direction of how they open after a doji. If it opens positive, I know that I can either be buying, adding to a position if that's what I want to do, or if I didn't buy here, I know I've got a high probability trade breakout right here. So this is just nothing more than common sense, observing where your entry points are, which is when it breaks out of a pattern one way or the other, that's when you get in. That's where your high probability trade setup occurs. What's my additional wedge confirmation? The fact that not only did they break out through the top, but they did a best friend gap up. So I had a wedge formation moving sideways for months, and then they did a best friend break out of that wedge. What does this alleviate? that most investors have as a problem. Man, this has jumped up 17% today. I don't know whether I want to run after a stock that's up 17%. Well, if we can identify what's going on, we know there's more than likely a much higher upside. Which one you follow, the red or the blue? Both. And it's not that they cross. I'm just looking to see where the stochastics are. We don't want to be buying a buy signal in the overbought area. We don't want to be selling a sell signal in the oversold area. Can't find one. Logic says I see buy signals. It's got a better probability of a bullish reversal if it occurred in the oversold area. You probably don't have to set alerts, Francis. You should be watching to see what's happening here. Notice that we started with some bullish trend or bullish buying off the bottom of this trend. It's heading up. So what's our assumption? That we're heading for the upside of this trend. So it's not like it's going to surprise you one way or the other. You've already got an indication of which way it's going. Then gaps with candlesticks are your best friends. I always allude to the advice of most money managers that say, stay away from gaps. You don't know what they're doing with the price. If you know what your candlestick signals are telling you and what the gap is telling you, that's pretty much, if you see a doji followed by a gap up, we call that your best friend. Now again, that's going to be something we're going to be concentrating on the weekend of the 15th on Saturday. We've got it scheduled, obviously, like we usually do, for a 3-hour training. They usually last 5.5 hours. But when we put our ranking on the top ranked signals and patterns, it's based upon knowing which signals and patterns are going to have the best price moves. What is the blue moving average? The blue moving average is the 50. The red is the 200. Those are both simple moving averages, and the reason we have those on our charts is because every major money manager around the world has those moving averages on their charts to make their decisions. We don't have the simple 200 and the simple 50 on here to make decisions. We have them on here to see what our candlestick signals are telling us based upon everybody else's decisions at those levels. So again, back to your question, Kenny, on gaps. If my best friend is a doji gap up, telling me I've got a very strong price move, I've also got the added evidence that they're breaking out of this wedge formation. As day trading, if one or two candles, now if you're day trading, yes, if you've got a situation where, let's say this is your 10-minute chart, and it comes back like this and closes down here, close it out. What's the worst case scenario? You can always buy it back if it comes back up above the T-line. Remember, anytime you close below the T-line, and we'll take a look at some here in a minute, the probabilities go against you dramatically that if you close below the T-line, the probabilities are you're in a downtrend. So again, anytime I see this, I see them selling off. Notice we can see the failure. The shooting stars, shadows to the upside. Then they gap or they take it down hard. What did that tell us about the 50? Price still acting as a resistance. What did it tell us about our support? Not acting as support. What do we got here? A wave 1, sideways wedge going into wave 3 to the downside. Anytime I see something like this, I know I don't want to trade this because it's not going anywhere. But if I can start identifying this compression, I'm getting ready to buy. Now, somebody was asking, do you set an alert? If I thought, notice how we had a little inverted hammer, bullish confirmation, not closing below the T-line. If I thought this was a breakout about to occur and I had other things going on, I might set an alert, or I might even put a buy stop right here, telling me if they come up through there, they've definitely gone through the top resistance level. So identifying a wedge formation is very simple. You can see the support and resistance. You can see the trading range compressing. What we're looking for is the candlestick analysis that benefits us to identifying when that breakout of that wedge is occurring, like a Doji gap up. And look where it came from, right off the 50 up through that level. So what do we got going on? A big sideways wedge. Whenever they break out of that wedge formation, this is a bunch of indecision. This is telling you if they've made a new decision. And I always ask the rhetorical question, do you always get a big move like this? Not necessarily, but you're always putting yourself in positions where the probabilities are good that you're in a position like that. Yes, obviously, there's nothing that's 100%. But what you're looking at is, if you can see the wedge setting up, I mean, that's the whole reason we're looking at wedge in the first place, is the fact that we know what should happen coming out of a wedge, usually a strong move one way or the other. Now, will there be times where they take it up and bring it right back in? Yes, we can visually see that. And that could occur if the market, if this opened up and traded up and then the market took a big tank and came back down. Why were we buying this in the first place? This is always a question you ask yourself when you get into a position and then you're watching it. Why did you buy it? You bought it because it broke out of a wedge formation. So if it traded up here, let's say I bought in here somewhere, and then all of a sudden it was trading back down here, why were we buying it? We're buying it because it broke out, and if it's closing back down here, it's telling me it didn't break out, it's going to be one of the percentage trades that didn't work. I'll see if I can bring that up live. Yep, so there's always false breakouts. But the probabilities, that's the reason we're looking at these, is that things are usually going to go in the direction of what happens coming out of that wedge formation. And it doesn't necessarily need to be wedge. This is what we're also going to be concentrating on our training weekend. Where do the breakouts occur? The reason we want to identify the strength of a breakout, I can't tell whether, this is a kicker signal. Down day right here, even though it's in the yellow, and then gaps up and goes the opposite direction. The reason we try to identify these things is, first of all, we know a kicker signal has an extremely high probability it's going much higher. Something has happened right here to tell you the investor sentiment has changed dramatically. What that tries to alleviate is saying to yourself, oh, I don't want to buy this because it's up already 5, 10, 30, 50%. If that tells you there's a new dynamic that could take you up another 350%. Same scenario on the downside. If you're in an uptrend and you see that kicker signal to the downside breaking down, where do you think the next target's going to be? First target. Then support there. Where's your next target? The 200-day moving average. So once it gets here, based upon a kicker signal, that's the same chart. Yes, it is. Where's the logical place to start looking for profit taking on a short trade? When it hits a support level and does a candlestick buy signal. There's your bullish Harami Doji. That tells you I should be covering the short position. So these are the type of things that we're going to be looking for. The reason for that is, where do we want to get into a trade? We want to get into the trade at the exact point that is going to produce profits for us, not getting into something that might be coming back up but doesn't have any real strong buy signals yet, and we're just sitting here flopping around hoping that it's bouncing off an area. We can identify the signals and patterns that tell us exactly what to do. Harami Doji, yes. What you want to see the next day is, or the next, in this case, the next couple of days, notice you had a Doji, Harami in the oversold area. Next day you had an inverted hammer Doji. The next day it opened positive. What was that telling you was going on down here? The buyers are starting to step in. Okay, so we're going to go to some live charts. Remember, on June 15th, we're going to do a breakout training. Now, this takes the information that we know about candlestick signals and analysis and kind of formulates it so that if you're trading, whether you're trading on a intraday basis, swing trading, a little bit longer swing trading, that you're not sitting around hoping that your price is going to move, think it's going to. You're finding situations that it's moving right then. You know, okay, Becky put in a link. Yeah, that's the link for signing up. Now, here's our devious promotion for non-members. It's $297 for the day. For members, it's $159. So if you're clever, this is where we suck people in. You sign up for a membership for $97 and get a free, or you have a month where you can utilize the website, and then your fee is only $159. Now for those, yeah, that's for non-member. It's $159 for members. Now for those of you that are not members, the Candlestick Forum was set up as a training website. We've got a chat room that's open all day long. We have usually about 150 people. But there's a number of people in there that are trained well enough now that they can identify the good signals and patterns. That becomes a good source of trade prospects while you're learning about candlesticks. And the process of learning about candlesticks goes a lot faster when you say, when you go in and somebody says, oh, look at XYZ, it's doing a J-hook pattern. Well, now you become much faster oriented toward what a J-hook pattern looks like. I put out 2 or 3 stock picks every day. We do it in a video format, lasts maybe a minute, and I think the average is a minute and 50 seconds. But it kind of tells you what the market is doing. Oops, I don't want to. You tell what the market is doing, which we anticipate the market is heading up or down. And then if we think the market's probably oriented toward the upside, you might get 3 long picks. If we think the market's heading down, obviously you're going to probably get 3 short positions. If the market, we don't really know, you might get 2 longs and 2 shorts, or 3 longs and 1 short. But everything that you learn in candlestick analysis is merely common sense put into a graphic depiction. And I say that because when I started with candlesticks, I'd been a stockbroker for 8 years. I got out of the business because I realized that supposedly these expert analysts on the Wall Street, they didn't know any more about what made prices go up or down than the man in the moon. When I started looking at candlesticks, the one thing that kept hitting me in the side of the head was, this all makes sense. So if you're trading any other program or using somebody else's recommendations, if you lay candlesticks on top of those charts, on your charts, you get a much better analysis of what's going on. Ahmed, it's $97 a month. That includes the stock picks every day, It includes the chat rooms. We've got 2 chat rooms. We've got an options trading chat room and a stock trading chat room. About once a week, we try to do a special session, which could be where to put your stop losses using the common sense of candlestick analysis, your entry strategies, your scanning, how to scan for the best trades, where to start looking to take profits, how to use the gaps. So all this information is in video format training that's at a big discount for members, but there are other times where we'll take that same trading and do it live for members so that if you do have questions or have something that needs to be clarified, you do it right there as a free membership night. We usually do a Monday night for members, analyzing what the market's doing and what the best stock trades are setting up. And the same thing as what we do on a night like tonight, the Thursday night, which is open to everybody. All right, so this is what puts us well ahead of most technical analytical processes. There will be a lot of information covered. Okay, all right. For example, we knew when to start taking profits or going short in this market. There's our left-right combo. Now, one of the strongest pieces of information that we know is that if you see a doji and a combination signal, it's usually going to be acting more powerful than just a signal. So instead of this being a bearish engulfing signal, it's what we call a left-right combo, which is a doji followed by a bearish engulfing signal. The third element is, I don't know if I said 2 already, but the close below the T-line and stochastics heading down. Now notice prior to that, you really didn't have any decisive selling below the T-line. The uptrend didn't tell us it was over until we saw that sell signal, this left-right combo. Now, there's about 18 different very strong combination signals and patterns. And that's the type of thing that we keep training everybody to look for. First of all, you've got the 12 major signals, which is kind of a cultivation of the 12 major signals being the best signals out of the 50 or 60 candlestick signals. You've got about 8 patterns that work very effectively because human nature works the same way time after time. And then you've got about 18 combining all of that, signals and patterns, producing high profit reversal signals. A left-right combo, if I'm quantifying what we call the 18 or so top rank signals and patterns, go right up near the top of that ranking. Our best friend signal, a doji in the oversold area followed by a gap up, that's what happened on Monday. Monday? What is today? That's what happened on Tuesday. Monday, we did a doji. Now, remember why the doji is so important to recognize. I'm kind of going into deeper analysis here. If we see a doji in the oversold condition, and we know a bearish J-hook pattern is wave 1, wave 2, and wave 3 is getting to be about the same magnitude as wave 1, and we see a doji in the oversold area, that's given us a little bit of suspicion that if we're short and there's a doji, get ready for a possible reversal. Now, a possible reversal on a doji is a bullish open and trading positive. A strong reversal is a doji followed by a gap up and positive trading. Remember that doji followed by a gap up we call your best friend because it's got 2 things that it's going to be profitable. 1, it tells us with a high degree of probability of the new direction, and 2, not only does it tell us the new direction, but a best friend signal tells you there's going to be an extremely strong new direction. So if you look at the other indexes, like the NASDAQ, Remember, this is not a signal. This is an up day and a downtrend. Kind of don't classify it as a signal. But it was a strong day. Closed here, opened here, and went this direction. Now, on its own, say, oh, we've got to be a little bit leery because the NASDAQ didn't do a reversal signal. However, if you put it in conjunction with the Dow, the S&P 500, all the different indexes, you can analyze in a matter of, look at all 3 or 4 of them in a matter of 10 seconds. Same scenario on the S&P 500. A spinning top, which is like a doji except with a little bit bigger body, and they gap it up. What's that tell us? There's been a dramatic reversal. Where do you think the first likely target is right now that everybody's watching? We're going to see what happens once it gets up here at the 50-day moving average. So, did we suspect this reversal? Definitely. Because look where we were. We're in the oversold area, and we're starting to see indecisive trading. We saw a gap down. I don't know whether the Dow did a gap down or not. You started gapping it down in the oversold area. And remember the very simple analysis that the Japanese rice traders tell us. Where do most people sell? They panic sell at the bottom. Do the tails count on the doji during a gap up? Or do we look at the bodies? Well, the body's nothing. The body's usually very small. The trading range is the upper and down shadow. It's still, if this is a reversal, it'll open positive. What's positive? Above where it closed. Now, if it's a gap up best friend, it's going to gap up usually above the high of that day. Let me see if I can make it bigger. I'll see it. Notice how it closed here and it gapped up above any trading. Now, if it gapped up here and started trading positive, that would still be a good indication the bulls are taking control. But the fact that they were able to gap it all the way up and take it up, that was even a stronger indication. So back to somebody's question, what about gaps? Candlestick signals and gaps. Because you know what the signal is telling you, the gap is also telling you the strength is the gap is the strength following that reversal signal. Yes, so in this case, we've got potentially a morning star signal, which this is probably considered a morning star signal, these three. But the fact that they closed it well above the halfway point of this candle makes it a morning star signal. The fact that they gapped it up makes it a best friend. And the fact that they closed it above the T-line told you there's a definite change of investor sentiment. Yes, well, yeah, they always fill eventually. But that may not mean anything to us. If we're trading this, it may not fill this for 2 months, 2 weeks, 2 years. We're trading this right now. Notice the gap down. Looks like they filled that gap up today. So, yes, a gap is always a target to watch for. Now, let's put some of the psychology, which is, again, just common sense. If you see a best friend signal and you start seeing the buying, notice the one thing that happened on our recommendation of CSIQ. They never could close it below the T-line. Look what this was doing right in here after this best friend gap up. Look what the market was doing right in there. They were selling off hard. So what's that tell us right away? Well, what should that confirm? That should pretty much confirm that a kicker signal is based upon what's going on in that investor sentiment of that signal or pattern. That's why we recommended CPRE a while back, because there's our kicker signal, consolidated, but notice where it consolidated to. If we know that if it stays above the T-line, showing you a strong uptrend, if it stays above our 3T line, it's showing you that's that much more compelling, strength. They can't even get it back down to the T-line. So look what was happening right in here when the market was selling off. It was still trading up. What do you think would happen once we saw or anticipated that the market was going to reverse? That our strong patterns that weren't selling off during when the market was selling off are probably going to act pretty strong when the market starts coming back. Stochastics 12.33, and that was nothing more than one night many decades ago. I was sitting at my desk thinking, all right, 14.55 on the stochastics are a little bit slow. Arnie, you might want to hit your red X, log out and log right back in to get a better connection. What was I saying? Oh, that if they weren't selling it off after a strong buy signal, there's your kicker signal on plan. The reason we were recommending it is because they weren't selling it off, and with the market turning around, it was probably heading up even further when the market turned. Would you buy on an open on the first green candles after a doji if the Dow you just showed? Yes. So here's the whole common sense analysis. If we're seeing a downtrend, we're in the oversold area and we see a doji, what do we already suspect about seeing indecision in the oversold area? That the doji may be the reversal signal. What do we need to see to confirm a reversal signal doji in a downtrend? We need to see it open positive, telling us that's the direction they're going to go. Remember our doji rule. Yes, a positive open. Now, on the Dow, we know it was going to open positive because when we woke up and we looked at our TV screens or our trading platforms and saw the pre-market futures were showing a positive 235 points on the open, we knew they were trading positive, confirming our signal. If we had any charts that we had looked at the night before and using our simple scanning techniques, saying if this opens positive tomorrow, we want to be buying. Let's see. All right. So let me take a look at, the other day we recommended, I'm doing this because this tells you when to buy and when to sell. One of our strongest patterns is a J-hook pattern, made even stronger by a Bobble breakout. A Bobble breakout is wave one, hitting a resistance level. You see there's time to take profits, and then it comes back up, usually hugs the T-line. Then it came back up and closed above the resistance level. If we got out here, we can be buying right here because what do we expect coming out of a Bobble breakout? Extremely high probability we're going higher. And what's a Bobble breakout? It's just a more refined, defined J-hook pattern. But if you took the 50-day moving average out, basically have a J-hook pattern. What were we expecting on this move? More upside. What happened today? It opened up here, it gapped open, and traded up here. Now, what was the warning when it traded up here? Look where it was compared to the T-line. So anytime you start moving that far away from the T-line, remember our simple T-line rule. The further away you move from the T-line, the higher the probability it's going to come back and test it. Or at least in this case, the 3 T-line. So if you're way up here and you don't have a sell signal, now what do you do based upon already that alert that you're too far away from the T-line? Well, you go to your 10-minute chart. So there was your open. And then when you started seeing it sell off, you start getting ready to take some profits. Because why would we take profits if we start seeing selling on the 10-minute chart? That means the It means there's some profit taking going on because we're way above the T-line. So you start seeing some selling. What's even more concise? Flip to your 5-minute chart. What did your 5-minute chart do? It did a bearish Harami. Look how far away the 5-minute chart was away from the T-line. If it opened lower after that, where's it coming back to? The T-line. Take some profits. I didn't buy a put on, but I did on CVS, got them mixed up, okay? All right, so as you look at this chart, that's the 5-minute. Go back to the 10-minute. So that's what it did. So this is not an unusual price pattern. That the initial move is big. When they start selling it off, and I do this whether I'm trading stocks or futures like soybeans or cattle, that once they've had a big initial move, once I see the selling start, I take profits, because I can always buy it back if there's a new price move, which you can see in this chart, there wasn't really any by the end of the day. Now, what's that tell you about your daily chart? Pretty much tells me I've got a bearish belt hold type signal. So if you were trading this and you weren't watching it, but you saw that it opened here and started trading here, safety stop was right here at the open, because logic says if it comes back down through there, it's time that they're taking profits. If you stayed long, better see it open positive and trade positive tomorrow. If it opens lower, it's probably coming back to the T-line, and you don't know what it's. We have to wait to see what it does from there. So I'm pointing this out because not only does the pattern tell you when to get in, but simple logic of using candlestick signals tells you when to come back out of a trade. So knowing what a trade pattern looks like, let's make this smaller. We recommended X-ray today. Just look at the pattern. There's your little scoop pattern. And look where you are right now. So it traded positive today. If it opens positive tomorrow, what do we got going on? A Doji sandwich. Again, a Doji rule that if it opens positive, it's going to trade positive. If it trades positive, more than likely the magnitude of that candle will be the same as this. And what's that tell you about your resistance level? It's not there. You're now in the next wave to the upside. So not only are you able to recognize where a pattern breakout should occur, you also know exactly what type of candle could create that breakout. So instead of buying up here, you're already buying right here with much more confidence, knowing the type of move it would make. Would you wait for the breakout on X-ray to enter? Well, that tells me, yeah, maybe if it came up through today's high. But if it just opens positive, I'm getting ready to buy because I know what a Doji sandwich looks like. And that if that Doji sandwich occurs, creating a candle of that magnitude, I'm well above the breakout level. So this is why being able to identify what type of signals and patterns are setting up allows you as an investor to be buying immediately on seeing a positive open in the Dow the other day, instead of waiting up here like everybody else or following everybody else. You're already making a good profit. So the big benefit that we have out of candlestick analysis is it gets you in early based upon the confirmation of a signal. I often get asked how many days do you have to wait to tell you that there's been a reversal, and the answer is 0. This is the signal. Doji gap up. We're buying right here, which does two things for us. Gets us in early if the trade works. If the trade doesn't work, if it opened up here and immediately came down here, you're back out very quickly with a small loss. The breakout has already happened. On which one? Oh, on X-ray? Yeah, you're pretty close with, essentially, you can consider that it did break out. You might consider this the breakout level, but here's your ultimate breakout up here. And what are we looking for? Well, we can see that we got a scoop pattern setting up, and if it opened positive and traded positive of that magnitude, the breakout is very convincing. Marvell. This is why you want to recognize what type of pattern setups. No, Brad. Basically, what was that one? X-ray? Basically, you're looking at what is the pattern setup. I bought today because I figured if they opened positive, we're at the breakout level. All right, so it closed right here. Not terrible, but we're still at the breakout level that opens positive. Now, on the other hand, if it came back down through the low of today, if it opened lower and traded this direction, I'd close it out, because what did it tell me about this breakout area? It didn't break out. Mike, that's the bad way to look at it, and that's what everybody says, that the Dow is only 30 stocks. It is representative of the whole market. If somebody asks you what the market did today, or what most people will look at, what did the market do today? They say the Dow was up or the Dow was down. They don't say the New York Stock Exchange was up or down. They say the Dow was up or down. Now remember, that information, the Dow up or down, is based upon something that everybody watches. So it's not necessarily having to reflect 30 stocks versus a bunch of stocks. All it's really telling you is what is the investor sentiment telling you about this market, whether it's heading up or down. So if you can look at the Dow, and if you want to assure yourself, I can look at the Dow, the NASDAQ, the S&P 500, and the transportation index probably in the matter of 10 seconds. I can see which way the markets are going. So the Dow, I could see was in an uptrend. The S&P 500, gap up, was in an uptrend. Why I know it was in an uptrend? Because it's up above the T-line. Because I don't think I can get the SPX over here. It doesn't come up over here. Yeah, so you can look at the S&P 500. You can look at the NASDAQ in an uptrend. You can look at the transportation index. What's my assessment on all of these? They've all come up above the T-line. We're probably in an uptrend. What was the weakest of all of them today? The transportation index. But what's my general assessment of the markets that was heading higher? The Dow is representative of what the big money is doing, because probably most institutions have to be buying Dow stocks or the big blue chip stocks, and they're the ones that are going to move the market. Hold on, Anthony. Hold on to each individual one. Let me go through this, because then when I tell Jim to do the double line, you type in what stock you want to look at. All right, so let's take a look at the biggies. Another thing that's telling you whether the market's turned around, look at the kind of the kicker signal in Apple, back up above the T-line. Now, is Apple an indicator? Somewhat. If you have the big stocks that everybody is watching trading positive, and the market's trading positive, you can pretty well assess that the investor sentiment is now getting or getting back to being bullish. Netflix, you can see, did a kicker signal. Notice what it's been doing. It's been using the T-line as a support, telling us they're not ready to sell this one off, or they're still buying. Not a reversal signal on Tesla. but it's trading up. Now look at the gaps up here. Probably filled this gap today. It still filled this one. If it fills this one, that means it's coming up to test the 50-day moving average. So if my stochastics are heading up and things are trading up above the T-line, I can pretty much assume there's NVIDIA. If NVIDIA trades positive, what are all the different techniques I can put on this chart to analyze where my market or where the price might move to? Well, it might move to the 50, might move to the 200. Or what else is everybody watching? Well, you've got people that watch the Fibonacci retracement numbers. So if you put those on here, well, you've got this target, and this target. Now, do I think it's going to those? I have no idea. But if I see a sell signal here, I know they're resisting at the 38. If I see a sell signal here, I know they're resisting at the 62, which coincides with the 50-day moving average. I'm not trying to project where a price is moving. I'm just trying to witness where the reversal is occurring and it's time to take profit. Okay. All right, so there's lots of trading strategies. For example, Sienna was up big today. I don't know whether it was earnings, but it was a Doji gap up. Your best friend, you expect more upside. Anytime you see this, you might be afraid to chase it, but if you know it's a best friend signal, this is what you kind of expect for more upside. We're also looking at pattern breakouts. We recommended GH over the last couple of days. I forget what day it was. Look what was happening, a big fry pan bottom. Where did the ultimate breakout occur? Right about in here where the fry pan bottom started getting dicey. What's our expectation on this one? What do we expect coming out of a fry pan bottom? A strong price move that could possibly bring you back up to test this level. So that gives you a lot of, that's not what I want. That's not what I want. Gives you a lot of different techniques for which spreads you might put on. Here's another one. Look where it broke out. A fry pan bottom broke out on ECL. So this is what we're kind of looking for. What's happening right at the level that we can recognize there might be a breakout. All right, thanks, Sig. Oops. So now look at kind of a little fry pan bottom, supported right on the 200, closed right on the 50. If this opens positive, what's it telling us? The fry pan bottom's breaking out. The 50 is not acting as resistance. How come I can't get rid of that thing? Where do you think the next target might be? Again, there's a gap right up here that might be your first target. So we can visually recognize when it's the ultimate time to buy on a breakout situation. The RKS, kind of a fry pan bottom. If it opens positive, what's it telling us? They've broken out. You've probably got a lot more upside. Now, there's two different criteria. Look at our bullish Harami. We're looking for candlestick signals that occur in the oversold area. Usually on a pattern breakout, the stochastics are already up in the overbought area. So we're looking for, obviously, things that are going to produce high profit on a breakout. Again, there's our best friend breakout. This is what we're looking for. This is what we're looking for. A lot of people say, man, I don't want to be going after a stock that's up that big. This is a breakout. Now we can recognize whether this is going to go into a 45 degree, which gives us a lot more upside. When they gap up like this is what we're expecting, a 45, which is just kind of a up angle, and then we stay long as it doesn't close below the T line. So EHTH is, these lines come from. See where this broke out, and you can see what happened right here at the breakout level. Kind of a J-hook pattern. So if this is wave 1, and this is wave 3, what's it telling us about our fry pan bottom? It's more than likely breaking out. How are you finding these? Pretty much by a simple identification of, I might be watching this to see if this is a wedge breakout. See how there was a, what I wanted. You can see how there's kind of a wedge formation setting up. Now I might have been watching this because there was buy signals, but I could see it's a wedge. That may have been my buy. But then also look at what the bigger picture is, a fry pan bottom. So you don't have to necessarily be looking for that initial pattern, meaning the fry pan bottom. You may have been finding this because of another pattern. Yes, I do have, I use either Metastock or Warden Brothers to do my scanning. Now, they're both about $97 a month also, but they're well worth it. I mean, I can usually scan for the best trade setups each day in probably less than, in my case, 5 minutes each day. But if you don't know what you're doing, maybe it takes you 15 or 20 minutes. But once you learn what patterns, what signals to look for, yeah, you're only spending 20 minutes each afternoon trying to identify. I'm going to identify which cards to go after. AMD. Everybody's been watching this. Notice that it broke out. Notice it also has a fry pan bottom. And today it did kind of a, again, a trend kicker doji sandwich. Yes, TC2000, that is Warden Brothers. So those are the two that I use the most. Let me see if I can find. Look at this breakout. We can see wave 1. We can see wave 2. And how did they break out of wave 2? Looks like kind of a bullish doji sandwich. So what's our upside expectation? Well, if this was wave 1, wave 3 is probably going to be about that same magnitude. Now, that's nothing more than doing a scan, and today it told us that it broke out. So that put me in a position to say, all right, if this opens positive tomorrow, I'm kind of anticipating this type of move. Kind of the same scenario is why we recommended Marvell. This is wave 1. This is wave 2. This is kind of a bullish flutter kicker. That this could be wave 3. Same magnitude as this one right here. ACA, well. For some reason, some of these symbols don't come up over here. Tractor Supply. Where does that line? Look at the slow curve right off the 50. Doji sandwich that broke out. There's another doji sandwich. What can we anticipate? Wave 1. wave 3 the same magnitude. So again, this isn't rocket science. This is just identifying the patterns that are created by human nature that the Japanese rice traders have identified with 400 years of experience, or not experience, but actual use of their charts. You can see where the wave 1, wave 2 breakout occurred. Again, kind of a double doji sandwich, little scoop type pattern. So because we can recognize and utilize the information based upon a pattern, look where this broke out. Right here at the 50 on a doji sandwich, you had buy signals. There's your left-right combo. You can see it was kind of a double bottom. Where do you think your next likely target's going to be if they broke through the 50? They're probably at least coming back up to test the 200. Clorox. I would never trade Clorox, except notice what it's done. Another doji sandwich breakout through the 50. It looks like it's, let me make this a little bit smaller. Clorox has got to be one of the most boring stocks to trade, except when something's happening that we can identify pretty quick that they're breaking out through this little downtrend. Might be a slingshot effect. Why do we expect a slingshot effect? Because that's exactly what we're looking for. Let's see, did I do this one? That was a big breakout. Low curve breakout. Just putting you in positions of being in a high probability setup. Little scoop type pattern. Kind of a flat handle. There's your scoop. Slingshot effect. Where? Well, at least coming up here to fill the gap. The scoop pattern is one of the patterns that have a very easy visual recognition, and then knowing exactly like this guy here. We know what should happen coming out of a scoop pattern. A strong slingshot effect to the upside. Ahmed, hold on, I will get to that. Now I've lost that place. AVLR. Scoop type pattern. Look for a slingshot effect, especially if it breaks through up here. Notice a little scoop type pattern. This is what you're expecting coming out of that scoop pattern. All right, so some that we have looked at. There's your inverted hammer. There's your breakout. There's your first target. It's probably up here filling this gap. This is recognizing kind of a series of dojis. Then there's your doji sandwich. This puts, again, stochastics coming up, just puts you in a high probability setup. We saw that a few days ago when the market was selling off. Look what happened here. Left-right combo, one of your strongest reversal signals. Notice that there was a bullish engulfing, didn't confirm. Bullish harami didn't confirm. Inverted hammer didn't confirm. Left-right combo confirmed. And notice what happened after the confirmation. Nugget told you that there was a strong price move. Well. Yeah. Look what happened in the other gold stocks. There's your best friend, Doji gap up. So all you have to do is recognize which pattern setups work the best. And what I kind of concentrate right now on is telling people you don't have to learn. You want to learn the 12 major signals because that's your bricks and mortar. You also want to recognize the patterns, because that's not anything you have to memorize. That's going to be something that once you start seeing them, you're going to recognize a scoop pattern or a fry pan bottom breakout or a bobble breakout. Then you've got the 18 that you can kind of combine all that, and the ones that you really recognize or you think you can be good at, I tell people, just learn 4 or 5 signals and patterns real well. Become an expert at those patterns. Now what you do as an investor is you eliminate your emotions out of your trading, and you eliminate the necessity of listening to everybody else, all the talking heads on the financial news stations, Kramer, Steve Bigalow, all these big blowhards. You can analyze each chart on your own and know that you're in control of your investing decisions. Can you enter a trade on positive open after a bullish Doji sandwich completes? Yes. Because the implication of a Doji sandwich is that there's going to be more upside. So one of the patterns that we really like to identify, I don't see one here, is what we call a McMuffin, which is a morning star signal followed by a Doji sandwich. And we know that a morning star signal confirmed is a strong candlestick reversal signal. We know a Doji sandwich is going to imply more upside. So a morning star signal followed by a Doji sandwich or a morning sandwich we call a McMuffin, because it's got all the elements of telling you there's going to be a lot more upside. Mike, we're not buying support or resistance. Which one were you saying? Gold? We're buying this. Stochastics just coming out of the oversold area, your best friend signal. We're not buying the fact that there's a 50 or a 200. Now, we're paying attention to see what it does, but it's not keeping us. Remember, the most important criteria for candlestick signals is the signal. Everything else is just a confirming indicator. Not very risky at all. This was a very strong signal. That's like saying the Dow was risky because it did a big reversal signal and there was a 200 right here. This is telling us there's a strong reversal. Now we just watch to see what happens at all those different levels. All right, so I'm going to put in here once more. Here's the link. Now, the reason we're doing this breakout is if you can find a trade situation. Oh, and I should have marked which ones they were. For example, we know exactly what to do on a breakout right here. If we were buying here, we could anticipate it could possibly come back up to this level. Yeah, could have failed here and done a wedge. But if it breaks out through here, we know the probabilities of it doing this type of move become extremely strong. This is why we're looking for these type of points to see when the breakout should occur. So, take a look at just spending a day recognizing a pattern and when the optimal time for a breakout should occur. If you have a best friend signal below the T-line that does not cross the T-line, yes. Remember, the T-line is just a confirming indicator. If this happened the other day and it closed right here, I would have still been a buyer, but then I would just be watching to see what happens once it gets into to the T-line. When is it too late to buy into an upward trend? Well, the whole point of candlestick analysis is that we're trying to find the high probability levels to start buying for two reasons, because our upside potential is that much greater and our downside risk is that much smaller. So now you have to calculate. Am I in the overbought area? Not yet. Maybe I can still be buying this one. However, if I was over here, saying, should I still be buying here? Probably not. I should have been buying here, because what am I doing now? I'm already buying an uptrend that's already up in the overbought condition. If I'm buying on positive trading tomorrow, because we're not in the overbought area yet, and we're anticipating wave 1, wave 3 taking you all the way up in this area. So the one question I always get, somebody will say, well, can I still be buying here? Well, what's our risk-reward factor? We're looking for buy signals down near the oversold area. At this point, we'd probably be looking more to take profits because we're already up in the overbought area. Would it go up higher? Yes. So at that point, we're just holding. We're not buying. What is it making the Labu go into the dumper? Have no idea. We're not trying to analyze why prices are moving. All we're analyzing is the prices aren't moving. So that's pretty much telling me, yeah, do I want to buy the biotechs? Probably not. Do I want to be buying gold stocks? Well, it's already had a pretty good move. Right here was telling me, yeah, you want to start looking at the gold stocks. Nadine, yes. Depending on how long a trader or what type of length of trading you do, I'm a swing trader, so I'm usually looking at the daily. If you're a longer-term investor, you might look at the daily and the weekly chart. And if you're a real long trader, you might look at the daily, weekly, and the monthly. Whoops, that got pretty. What happened there? And the monthly chart. So the monthly chart's saying, all right, Nuggets all right to buy. The weekly chart's saying Nuggets all right to buy. The daily saying, well, maybe I want to hold off on buying right here, but if I was holding, I would just hold. Do you watch overbought area when you're doing day trading? Yes. Remember, I'll just use our example of HIIQ. I was way up here, well in the overbought area, that far away from the T-line. When I flipped to my 10-minute chart, I was getting up into the overbought area, way away from my T-line. So if I was day trading this, oops, they're starting to sell. What's my 5-minute chart look like? Very Shirami, let's take profits if it opens lower. And I'll buy back if it bounces up. It didn't. If I went short here, I'd stay short. It didn't support at the 50. Look at my inverted hammer, bullish confirmation. If I was had shorted it here, I would have been buying it for covering the short here. If I'm trading crude oil off the 10-minute chart, there's my. This is the 5-minute chart. I'm buying right here. What was setting me up? Looked like my 10-minute fry pan bottom was just about ready to break out. Should I be buying here? Well, I'm going to get a little bit faster. My 5-minute chart is breaking out, telling me my 10-minute chart's breaking out. There's my, so, yes, this chart is on a 5-minute chart basis. This is on your daily chart basis, telling you which way you're in the oversold area and they're starting to buy down here. Ford, nothing on that chart. If you can look at a chart and say, I really don't know which way it's going, go on to something else. There are 10,000 trading entities out there to trade. If you see something that you really can't get a grasp on, why are a lot of people buying Ford? Or if I was buying Ford, I'm thinking, I really like Ford. I think they're going to do well. The one thing that you have to watch out with that type of analysis is the market doesn't give a hoot what you think. The market is going to do what it's going to do. What we're supposed to be doing is analyzing what the market is telling us. Right now, yes, Ford did a bearish harami right here at the T-line, traded lower today. What's that tell you about the force of this chart? Tells you probably don't want to be long. Facebook. You don't have a reversal signal. You do have a bounce up off the 200. So if you don't have a reversal signal, and it looks like it's heading up, what's your first assumption? When it gets up to the T-line, see whether it's going to go through or not. The reason for that is this may just be a bounce. It's probably more of a bounce than a reversal, because if it had done a reversal signal, we would have identified it. If it didn't do a reversal signal, you got to figure the probabilities aren't as strong of a strong up move versus seeing a full-scale reversal. So the whole point of what we're trying to demonstrate tonight is we're looking for the spots. That's not one to illustrate. I'm trying to find one that will illustrate. X-ray. Go back to X-ray. X-ray is telling me, all right, I'm right at a level that I know what should happen at this level. If it opens positive, it's breaking out. Oh, John. What is a reversal signal? There's 12 candlestick reversal signals, 6 longs and 6 shorts. Don't have time to go through them right now, but that's a bullish harami. Telling you the selling has stopped. A doji is a reversal signal. The bullish engulfing, the bearish engulfing. The first thing you want to do is just learn the 12 major signals. Chuck, that's another question that everybody asks. What are the 4 strongest signals for me to learn? Learn the 12 major signals. Today, or in this market condition, it might be the bullish harami. Next week, it might be a bullish engulfing or a hammer signal. But it's only going to take you an hour to sit down and learn what the 12 major signals are. Another way to learn is go back through your charts. Say, all right, what happened here at this bottom? Kind of a belt hold piercing signal, gap up. What happened right here? There's our Bobble breakout. When was the top? When they gapped it up in the overbought condition and started seeing dojis. When was our selling? When they gapped down and they couldn't close it back up above the T-line. What was our bottom? There was a spinning top. That's how I learned the 12 major signals. I just went to the tops and the bottoms and said, what am I seeing here? Isn't a tweezer bottom on Facebook a reversal, at least for a couple of days? Facebook almost had a tweezer bottom. It is a potential reversal, but you can see that they aren't exactly the same. But they're close enough to the 200 to say yes, but you don't have a reversal signal. Now, at this opened right here, versus here, that becomes a reversal signal. Now that might seem a little bit ridiculous, but if this was a reversal signal with an opening slightly lower and coming up, we'd have what the Japanese rice traders indicate was a reversal signal. And it opened right here and closed up here. Now we've got a bullish harami because it opened above the previous day's open. With the fact that it didn't do a reversal signal, tells me, yeah, you probably got the possibility of it of bouncing, but not a full-scale reversal. So if I had my druthers, instead of buying Facebook, I'm going to go find something that has more of a relevant signal, like Apple that had a kicker type signal after a spinning top. That's telling me there's a lot more force in that signal. Okay, any other general questions? Ahmed, yeah, we'll look at that. Jim, go ahead and do the double line. Yeah, if Facebook does open positive tomorrow, you've got kind of a double doji sandwich setup. And in 2.8 seconds, Jim, do the second double line. And more than likely, you could take you right up to the T line. So if you're a day trader, yeah, you could use that as your setup. This is exactly what we're going to be looking at on 2 Saturdays from now, is which ones give you the high probability setups. And obviously a doji with a positive open, especially if it was on a resistance level, is telling you there's probably a breakout. Have a look at Lulu. Lulu, at this point, you can see where the fry pan bottom breakout occurred. Here's your best friend breakout of this fry pan bottom. Once it comes up above up on the breakout, what's your analysis? Very simple. You stay long until you see a sell signal and a close below the T line, with the caveat that if you start moving too far away from the T line, start going to your 10-minute chart. That was on ARWR. AKRX, nothing here to get real excited about. Notice it did a doji. I don't know what the volume is, but on a $4 stock, you probably want the volume to be pretty hefty. But you can look at this and say, all right, it comes up through this level, then I can start buying, because now I have the prospect of a wave 1, wave 2, wave 3. So until it comes up through that level, if I bought here on this day thinking that it was starting to break out, it better stay above the T line. If I'm thinking of buying, I want to see it break out into a much higher probability area. NXE, nothing there to get excited about. What's the direction of this one? I'd be someplace else. Boeing, same scenario. You can see that it's not really going anywhere. Now, if you like it, you can be buying it on positive trading, but you're going to need to get through this area. So you buy it if you like it. It's just not the best looking directional chart. Home Depot. Notice it did a little doji type day right here at the 50. Notice how it started with your doji gap up off the 200. Now you're at a resistance level. So here's your simple analysis. If it opens positive, what's our doji rule? It's going to trade positive. If it opens lower, what's it tell us about the 50? It's acting as a resistance. If it starts pulling back, what's your next prospect? Maybe it's coming back to the T line. You can always buy it back if it does a bobble breakout coming back up through the 50. ISRG, same scenario. Got a nice little reversal, a doji. If it opens positive, you can see that it's broken this downtrend. Where's your next likely targets? Up in this area. There's like a wee little teeny gap between this area right here. Tesla, do not do Tesla. Tesla, you can stay long, but remember, this one didn't do a reversal. You stay long until you see confirmed selling or a confirmed sell signal. At this point, because this isn't a reversal signal, I'd have a safety stop right here. If it came back down through there, that means the lack of a strong reversal signal telling me they're already taking some profit. Intel, not very exciting, but you can see what's setting up. There's kind of your fry pan bottom. Where's your next likely target? There's a gap right here to fill at the 200-day moving average. Planet Fitness. All you can assume is that your uptrend is still in progress. You can stay long as it stays above the T-line. And why do you think the T-line's a factor? That's what they've done for the last 3 days, coming right down to the T-line and bounce back up. Now, why is that a more relevant factor to us than a lot of other people? Because very few people, if statistically anybody, has the T-line on their chart. That means it's acting like a natural support and resistance level. GE, nothing to get excited about here. If you want to do anything with it, it has to break this little downtrend channel. So I probably wouldn't be long or short GE right now until it comes back up through this level. And even then, your rate of return may not be all that spectacular. Okay, we did Home Depot, right? Yes. Costco. Costco, you can see the long-legged doji, bullish confirmation. Now you're sitting right there. You can still buy this one on positive trading. If it opens lower and trades lower tomorrow, you can pretty much assume a double top right here. AMRN, nothing. I wouldn't be long or short. What's the direction of this stock? Notice your ticker signal. What was the next signal? Barry Sharami telling you to buying its stock. Kinder Morgan, don't know. It could be this trajectory, which is not unusual. As a trend, consolidation, and then it moves right back up to that trend again. So at this point, little slow curve, I would stay long until you see a sell signal. TJ Maxx, nothing. You can see that it's having a hard time getting through the 200. So it did bounce. I probably wouldn't be long or short this because you still got the downtrend to contend with. It seemed to fail at the the 200. I probably wouldn't be long or short. DLR, kind of the same scenario. Which direction is this moving? Really nothing. This isn't a signal. If it had closed right here instead of up here, it'd be a bullish Harami. I'd probably be trading something else. Not enough direction on this one. SCS. Same scenario. It's got to break through this downtrend. It's having a hard time doing that. If you're long, it's got to get up through this level. If it opens lower tomorrow, I'd close it out because that tells you your downtrend is still moving in the same direction. Lockheed, notice how it did a little inverted hammer bullish confirmation breakout. And notice how it got through the breakout. It gapped through that level. I would just stay long until you see a sell signal. Coop did a lot of whipsawing over the last few days. But right now you can stay long on this one. Notice your bullish flutter kicker type signal. And the added benefit of seeing that it came back down to the 50 and supported and came back up. Your next target is right now the top of this little trend channel. Crone, nothing there. Not until you can get through the 50. Notice when they gapped it up, they didn't follow through. I'd still be trading someplace else. Is this Pier 1? Nothing there either. I wouldn't be long or short this one. Beyond Meat, all you can do here is stay long as it stays above the T-line. If it closes below the T-line, close it out. You can always wait for the next buy signal. Remember, anytime you close below the T-line, the prospects or the probabilities are you're heading down. DNA, you stay long, but you can see the indecisiveness here. You don't want to see them open this one lower tomorrow. You want to see it stay above the T-line. Amazon, your first likely target is to test the T-line. There's a wee little teeny gap just above it. There's another gap up here. So if they start taking Amazon above the T-line, that's going to be additional confirmation that investor sentiment has gotten positive again, and we should be back in an uptrend. Tandem, nothing exciting here other than as long as it stays above the T-line, you can stay with it. Macy's. If you're short, stay short. You've got the prospects of a bearish J-hook or at least the continuation of this downtrend. So here's a perfect example that if I had been short, Morningstar signal, and it opened positive, I'd have closed it out. The next day when I saw a bearish engulfing signal, if it had opened lower again like it did today, I could have reshorted it. Philip Morris or Ultra Group, nothing exciting there. Really no buy signals down here. You're in a downtrend. I'd probably be trading something else. You went with CVS today versus, yep, that's a nothing chart. That's not telling you anything. And it looks like the current direction also is not telling you anything, which means I'd be trading something else. Holes, if you're short, you stay short. Didn't do anything here at the T-line. So what are you kind of looking at here? Wave 1, wave 2, possibly wave 3 heading you much lower. PMO, that one's at the breakout stage. You can see the wedge. You can see the Doji sandwich. If this opens positive tomorrow, your Doji sandwich breakout is in progress, which gives you a high probability of more upside. And notice how the breakout occurred. Again, with your Doji gap up, now you've got a Doji sandwich setting up. Nothing here. This is why I always tell people, the one thing that you want to realize is that not every trade's going to work. But candlestick analysis tells you when it doesn't work. This was probably a good indication telling me, oops, I can be buying. Maybe not on this day because I wouldn't have seen it, but if it opened positive, I'd be buying here. Or if I had bought, the fact that it did a bearish harami and then headed back down to the T-line would have told me close out the position. Jim, no, this is just nothing more than if you just kind of assume that the Japanese race traders, after 400 years, have given us very visual patterns to recognize. All we really need to do is just learn them because they're going to occur over and over. That's why we're looking at them in the first place. CLGX, another breakout. I'd stay long until you see a sell signal. All right, TC, thank you. Earnings on the 12th. CX, I would be out of this one. I don't think you could be short it because it's below $5, so I wouldn't be long or short this one. Oh, didn't we do Lulu already? Lulu, oh, maybe not. Lulu has to break this little downtrend. So if I was long Lulu, you need to see it get up through this level. If it opens lower tomorrow and trades lower, you definitely, if you're long, close it out because that's telling you you're still in this downtrending channel. Scoop type pattern on SNCR. You could buy this one on positive trading tomorrow, expecting wave 1, wave 2, slingshot into wave 3. Cody had a good looking chart. Wave 1, wave 2, kind of a double doji setup. Look for wave 3 to the upside. An AIG. All you can do with this one is anticipate that your J-hook's in progress and your trend's in progress. You just stay long as it stays above the T-line. Thank you, Jim. Yes. You missed Crone. Crone has a nothing chart. Not seeing well. Crone still needs to get through the 50. Really don't have any major trend to this one. Colony Capital. Got a little fry pan bottom, and you can buy this one on positive trading with a doji sandwich. Just be aware that your percent return may not be all that spectacular by the time you get up to your first resistance level. And UTT, nothing. Never get, if you're short, you stay short. Never gotten above the T line. You can watch it, but unless it does a major reversal signal, wouldn't be paying attention to it. Kind of a little doji sandwich on DHX. You can buy this one on positive trading tomorrow. And you just want to make sure it stays up above the T-line. Thanks, Gary. Owens, Illinois. Oh, no. That was Illinois. IO. Another one that if you bought it on the positive trading, it has to stay above the T-line, which means in this case, it has to open positive and trade positive. Berry was closed out today because not only did it close below the T-line yesterday, to stay in the uptrend, it needed to open positive and trade positive. It didn't. So it was closed out. Trade desk, breakout, look for a 45-degree here. Thanks, Brad. DSLR. What is that? Nothing of any consequence here. You can see the wedge, and you're right in the middle of the wedge. If you're buying it, I probably wouldn't buy it until it comes up through today's high, but then you just have to watch to see what happens right in this area. Not a great looking chart right now. This Amdocs, another one that you can buy right here, knowing that the breakout into wave 3 has occurred. Look at your left-right combo. CTSH, you do have that long-legged Doji, Harami, bullish confirmation. You can buy on positive trading with the expectation of filling this gap, which would get you fairly close to the 50-day moving average. Okay, everybody, there's lots of good trades out there. There's lots of good trade setups that if you just kind of learn a few of them, you're always going to keep yourself in high probability, profitable trades. That's like, whoa, I kept this way past your bedtime. All right, everybody, we will see you bright and early in the chat rooms tomorrow. We'll see you then.